Welcome to the deep dive. We're looking at an article today from Matali Rari called Settore di Diamanti in Caduta Libera. Fine di un'epoca. Basically, the diamond sector in freefall, end of an era. It's a pretty sharp take on the global diamond industry. And the main point it makes is, well, quite bold. It's not just saying things are slow, it's suggesting a really deep crisis, maybe even a kind of dismantling of the industry as we know it.
Exactly, and that's what we want to unpack based on this article. We'll look at the forces it says are at play, the evidence, and what this end of an era talk might actually mean for diamonds. It highlights falling revenues, mine closures, and questions about whether diamonds even have the same cultural pull anymore.
Okay, let's unpack this. The article gets straight into some, frankly, alarming numbers. Starts with the big names. De Beers, historically the diamond company.
Right, Anglo-American's major asset.
Yeah. And the article reports a huge 44% drop in revenue for them. Plus, they're sitting on $2 billion worth of unsold diamonds.
That much unsold stock. Wow. That points to a serious mismatch between supply and demand, doesn't it? And it's not just numbers on a page.
No, exactly. The human cost is there, too. The source mentions De Beers cutting over 1,000 jobs at Botswana. That's their joint venture in Botswana.
And Botswana's economy is heavily reliant on diamonds, so that's a massive hit locally.
Definitely. And the article stresses this isn't just a De Beers issue. It seems pretty widespread, like Alrosa, the big Russian producer.
Their profits apparently plummeted 77%. The article links a lot of that to international sanctions hitting their operations and market access.
Then you've got Petra Diamonds. They lost their CEO, sales down 30%, and the article says they're selling off assets now.
Which usually signals, financial stress, trying to stay afloat.
And it keeps going. Blue Kappa in Australia entered administration.
Yeah, that's serious. Basically means they're in deep financial trouble.
And Koidu Limited in Sierra Leone just closed operations entirely, laid off over 1,000 people after strikes cost them $16 million. They just couldn't recover.
So what the article really emphasizes here is that these aren't just separate incidents. It argues they're signs of something deeper.
Deeper how?
Well, that the whole industry is sort of out of sync with the times, as the article puts it. The old ways of operating, the costs, the symbolic meaning they built up, maybe even the geopolitics. It suggests these foundations are cracking.
Okay, here's where it gets really interesting. That end of an era feeling. The article talks about a cultural shift. Diamonds are forever, that whole idea.
Yeah, the symbol of eternity, rarity.
Exactly. The article suggests that narrative is losing steam because, well, values are changing. Younger consumers especially are demanding sustainability, traceability, ethics. They want to know the story behind the stone.
And the diamond industry's, let's say, historically opaque supply chain doesn't always mesh well with that demand for transparency, right?
Right. But the article does bring in another viewpoint, doesn't it? From an analyst, Paul Zimnisky.
It does. He offers a less apocalyptic take. He acknowledges it's been painful, especially the last 3 years. But he points more to specific economic factors.
Like what?
Like a post-COVID hangover, the luxury boom faded, plus the luxury slowdown in China, which is a huge market, and, of course, the rise of synthetic diamonds.
Wow, the lab-grown diamonds. They offer the same thing chemically, but cheaper.
Exactly. So Zimnisky's view, as presented, is that if these pressures ease up, the market could bounce back.
But he adds a warning, right, about stagnation.
A big one. He warns that stagnation risk is high unless the industry really pushes hard on marketing. So it's not just about waiting for conditions to improve. The industry needs to actively sell its story again.
And that De Beers situation really highlights the pressure. The article says the company is actually for sale.
Yeah, and Anglo-American slashed its value by $4.5 billion in about a year. But crucially, the article notes no serious buyer has stepped up publicly.
That says a lot about perceived risk, doesn't it?
It really does. And look at De Beers' strategy shift, mentioned in the article. Closing Lightbox, their synthetic brand.
Right. That was a surprise. They're basically ditching the lab-grown competition.
Seems like it. The article frames it as them deciding to refocus entirely on natural diamonds, doubling down on that classic diamonds are forever message, trying to create a clear separation.
And they're trying to reach younger buyers. The source mentions zillennials.
Yeah, that cohort born roughly 1993-1998, both De Beers and big retailers like Signet are reportedly running campaigns targeted right at them, trying to find new ways to make diamonds relevant.
What about that idea of diamonds as, like, investments, stable assets?
The article brings that up, but it also includes Zimnisky's skepticism on that point.
Why skeptical?
He argues diamonds just aren't fungible like gold. 1 ounce of gold is like another. But every diamond is different. Cut, clarity, all that. It makes the secondary market much trickier, more friction.
So, harder to sell easily for a good price compared to gold.
Generally, yes, unless you're talking about truly rare, top-tier stones. Those might hold value as reserves. But for most diamonds, the asset argument is shaky, according to his take in the article.
And the fallout from all this.
Yeah.
The article mentions the big risks for countries really dependent on diamonds. Botswana, Canada, Namibia, Angola, Russia.
Absolutely. Their national economies, jobs, it's all tied up in this. A prolonged downturn is a serious threat for them.
So Zimnisky's final point in the article comes back to
Marketing. He stresses it's absolutely central. Diamonds are a luxury good. They need to be presented that way, made desirable. But it needs to be a joint effort by the whole industry to build a new narrative that works today.
Okay, so pulling it all together from this source, the old era, built on maybe myths and monopoly power, seems to be genuinely fading. Market forces and changing values are hitting hard.
And the article suggests the way forward isn't just about better marketing slogans. It needs more transparency, real sustainability, and finding ways to align with what people actually value now. The potential is there, but diamonds need, as the article says, a new reason to shine.
So what does this all mean? This deep dive suggests the diamond industry is truly at a crossroads. It's facing this storm of market shifts, cultural change, and it really needs to figure out its future story.
Yeah, and maybe the question for you to think about is this. With ethics and sustainability becoming so important, and with alternatives like lab-grown readily available, can marketing alone really bring back the magic? Or does the industry need a much deeper fundamental change to stay relevant?
Something to definitely keep an eye on. Thanks for joining us for this deep dive into the diamond industry's challenges based on the Metalli Rari article. Keep exploring.